Hey everyone, welcome back to the channel. So this video here that I uploaded about 6 months ago has been one of my most successful videos yet. Over 150,000 views, so it kind of caught fire. I don't know if it was a thumbnail, I don't know if it was the popularity of Bitcoin, Michael Saylor at the time, whatever it is. I made this video that basically looks at a podcast with PBD and Michael Saylor. Michael Saylor is explaining MicroStrategy and talking about Bitcoin, but he also talks about MSTY ETF, the YieldMax MSTY ETF, which is this one here that you're looking at. Very, very, very popular ETF, right? I'm pretty sure it's YieldMax's most popular product. It almost has $5 billion in AUM. So I wanted to do a follow-up video because I've been seeing lots of videos on YouTube about MSTY ETF. Of course, now there's more and more income-oriented YouTubers, and of course, this is a hot ETF. But you'll see some crazy stuff with this ETF. And the most dangerous thing I've seen is, can you retire off this ETF, things like that. It just goes on and on and on. There's so much content about this, so I figure I'd do a little follow-up video. And for two main reasons. One, very quickly, just to review what exactly you're investing in with this type of ETF, this type of strategy, what the risk level is. And number two, most importantly, MSTY is now not alone. So of course, when something is very, very popular, is a very popular ETF, many other people are gonna make similar products. So there's many MicroStrategy or MSTR income-oriented or covered call strategy ETFs out there now. You have IMST from Bitwise. You have MSII from RecShares. You also have MST from Defiance, and maybe by the time you watch this video and this video is done, there's going to be a bunch more. It wouldn't surprise me. On the Canadian side as well, you have MSTY and MSTE on the Canadian stock market. So what we'll do is just review exactly what this strategy is. What are you really investing in when you're investing in these MicroStrategy or now strategy covered call ETFs? And then I want to go over review each of them in detail to try to make you figure out which is the best one for your personal portfolio. So just before we do that, I want to just give you a quick disclaimer here that this video is for educational purposes only. I'm trying to show you and educate you about how these ETFs work, what are the differences between these MSTR covered call ETFs, and for you to try to really make a decision if you want to invest in them or not. So it's purely educational purposes. This is not financial advice. I'm not a licensed financial advisor, so I just want to get that out of the way quickly and make sure you understand that. So let's start with, first of all, what are you investing in? Well, all these ETFs, guys, you pretty much invest in MSTR, okay? So if you're thinking about what is the risk level of these ETFs, well, your primary risk, and this is for all covered call ETFs, by the way, your primary risk, like major primary risk, is the underlying asset. So the underlying asset is the MSTR stock. So don't forget that even though the ETF has monthly income, weekly income, this is still an investment in MSTR stock. What is the MSTR stock? Well, you could see a bunch of podcasts, including the one I talked about in this video with Michael Saylor, that explains. But basically, MSTR is now they call themselves a Bitcoin treasury company, and they're basically leveraging their stock, they're borrowing money, they're doing all kinds of things to basically get leveraged exposure to Bitcoin, to accumulate as much Bitcoin as possible. In fact, what you're looking at here is a very cool strategy dashboard, which I have bookmarked, because what you'll get is the Bitcoin price, but you'll also see how much total Bitcoin they've accumulated. And Michael Saylor has said they're just going to keep accumulating as much as possible via, preferred shares, etc., etc., etc. They have all kinds of preferred stocks now, Strike and Strife, and there's other stuff as well. So they're raising as much capital as possible to buy as much Bitcoin as possible. And Michael Saylor himself said that if you are going to invest or want to outperform Bitcoin, you buy MSTR. I highly recommend you watch this podcast. He's been in a lot of amazing podcasts. This is definitely one of my favorites, about maybe 8 months old now, but I highly recommend it to watch this one. But basically he said investing in MSTR strategy is kind of like a leveraged investment in Bitcoin. A 1.5x to 2x approximately leverage bet on Bitcoin. So that is, remember that is really what your risk level is. Okay, it's you're investing in strategy stock. What is strategy stock? It's a leveraged Bitcoin play. That's as simply as I could put it. So whenever you see retire on this, can I retire on this, be very, very, very careful. Would you retire on strategy stock? Most people wouldn't. Just because it gives an income, a weekly income, a monthly income, doesn't mean you could just retire on it blindly. You have to understand what the heck you're investing in. So that's the first part. That's what you're investing in when you're investing in MSTE or IMST, etc., which we'll go all over in detail in this video. Okay, that's what you're really investing in. So the next question is, how are they able? MSTR stock does not have a dividend. Okay, they don't give out a dividend. So how is it that MSTE and IMST, which recently declared their first monthly distribution, which a crazy distribution rate here, I think it was like $7 a share, if I remember correctly. MSII also is about to, I think, declare their first distribution today. I'm filming this on June 16th. You have MST. You see that the yields on these are extremely high, right? 90%. How are they doing it? Now, remember that they're going to vary greatly from month to month. And if you understand what they're doing or how they're generating the income, you're going to expect varying distributions, not consistent distributions. They're basically selling covered calls on MSTR. That's what they're doing, guys, in one way, shape, or another. A covered call strategy is where you're, in layman's term, giving up a portion of the upside, or you're capping your upside, you're selling the upside. There's a million different ways of saying it, but they're selling call options on the MSTR stock. When you're selling call options on something, you're giving up a portion of the upside of that asset. You could sell calls on the S&P 500, on the NASDAQ 100, on a single stock, a group of stocks. When you're doing that, you're giving up some of the upside for those call option premiums. That is what these distributions are. They're essentially call option premiums. Now, what are how much premiums, or what are they based on? What are these premiums based on? On volatility. The more volatile the asset is, the more premiums these fund managers are making. Hence why MSTR is one of the most volatile stocks out there. So they're taking in a lot of premiums. That's why the yields are so enormous. So it's very important you understand that. It's very important to understand that the volatility varies greatly as well. And if you look over here at the actual strategy dashboard, you can see implied volatility. So that is really the indicator of how much premium they're making. Another cool site you could always go to, and this, again, this is just to educate you on volatility and how to find it for a stock. It's a cool site, Market Chameleon, and you could check out the volatility of the stock. It's right here, the 30-day IV, the 30-day implied volatility of MSTR right now is 50. So I don't know exactly what this is. Maybe if it's 1 day or something, I don't know what it is. And you could also see the historical volatility as well. And you could actually see that the volatility is going down lately for MicroStrategy. Sorry, you probably can't see that. Now you probably could see it. The volatility is going down for MicroStrategy right now. It's pretty low. If we compare that to the volatility of Bitcoin itself, and if you want, we could just look at IBIT, which is Bitcoin ETF from BlackRock. You see that the volatility is a bit lower, right? It's 40 instead of 50. For reference, Tesla's volatility right now is actually higher than MSTR. It's at 62, the 30-day volatility. And you could see the history. Anyway, I just thought I'd share with you a really cool tool for you to understand that these covered call premiums will change a lot based on volatility. For example, the latest one on MSTI is $1.47, but the month before was $2.37, $1.33. Volatility is a major factor, which will determine the amount or the yield, the distribution you're going to get when you're running this strategy. Another thing is also the net asset value. If MSTR is going up and up and up and up and the volatilities remaining the same, you're taking in more premium because you have more shares to write call options on. So that's another factor. Those are really the two factors, volatility and net asset value. So if volatility is going up, price is going up, you have that perfect scenario where you're going to get a crap load of premiums, which is why, you know, when MSTR was exploding about 6 months ago, the premiums were absolutely insane, right? When Trump won and there was a lot of momentum, you see that. Look at these premiums here. They've gone up substantially. But if volatility falls, you're going to get lower premiums. So it's very important to understand. This is why when I see retire off of, look, this is not like you're investing in something where you're going to get a fixed income or anything like that. The volatility is a lot on MSTR. Maybe over time it's going to drop. Michael Saylor has predicted that, by the way, that the volatility of Bitcoin and hence consequently MSTR is going to drop. That means the call premiums are going to drop as well, most likely, on these types of ETFs. So hopefully that's a good explanation of what you're actually investing in. Number one, you're investing in MSTR. Okay, that's your risk level, your performance is going to be heavily tied to MSTR. How are they generating income? They're giving up some of that stock price upside for those call premiums. Now, this is where it becomes different. Each fund manager, you have YieldMax, Bitwise, MSII. This is where they're kind of all doing the same strategy, the same thing, but at different levels. The answer becomes, how much upside am I giving up? The more upside you give up, the more premiums you take in. But if MSTR rips upwards, you're giving up more upside. So that's the sacrifice. So it's all about finding the one that best suits, or investing in the one or a combination that best suits your investment needs. And that's what we're going to try to answer right now in this part of the video. So we'll try to compare these ETFs. Let's start with the American ones for my American friends, which, you know, obviously you guys you're not going to invest in the Canadian ones, I doubt, because you don't have to deal with that currency conversion, et cetera, et cetera. So for the American ones here, the US listed ones, you have MSTY. It's the original. It's the OG. Very popular, obviously, like we saw. The management fee, and this is pretty much the same for all the YieldMax ones, it's at 99. The MER is 99. And the payouts are monthly. They're going to vary greatly. So this one has no leverage. That's the first thing to remember. It's not leveraged. However, just the name of this ETF provider, YieldMax, obviously they are doing a lot of covered calls. They're giving up quite a bit of upside to generate that maximum income, those covered call premiums. And I've had the brains behind the option strategy of YieldMax, Jay Pestricelli. YieldMax used to outsource their options to Zega Financial, but now Jay is they kind of bought out Zega Financial, I believe. So they're all together. And Jay, this guy right here, it really is the brains, I would say, behind the options. Another thing to note is that they recently changed their strategy to include call spreads about 8 months ago. So if you want to understand, everyone, because I can't get into the details here, it's just going to be too long. If you want to understand the options strategy of YieldMax, I highly recommend you watch this video here, which came out 8 months ago, where 28 minutes, and we discussed the option strategy in detail. Okay, I highly recommend it. I'll put the link in the video description below. Hopefully I don't forget. If I do, you have the title right there at the bottom. The next one is IMST. This one just came out from Bitwise. Another thing to note is many of these, if not all of these, I believe, they don't actually hold MSTR stock. So typically in a classic covered call strategy, you're just going to buy and hold MSTR. You're going to write covered calls on it. This one, they're doing it synthetically. They're using options, and you have it right here. You see them here, a couple of them here. They're using options to gain exposure to the price of MSTR. They're not investing in MSTR directly, but it's basically like you're similar to investing in MSTR. Not exactly, but that's what they do. It's almost the same thing. But the rest of the cash, because they're using options, they have a lot of cash left over in the ETF because they don't actually have to buy MSTR. They're just buying the options to simulate like they're holding MSTR. They're going to put them in short-term government bonds, which will generate a little bit of extra yield. That's why when you look at the holdings for many of these, by the way, in Canada, we'll get to that later, they don't do that. They actually hold MSTR. But here, they do it synthetically, which means they could invest the cash of the ETF, per se, in short-term treasuries, which will grant you a little bit of extra income as well for the fund. So IMST IMST does the same thing, right? If you scroll down, if you look at the holdings, you'll just see a bunch of call options and put options. So it doesn't seem like they're actually holding MSTR. So this one here just came out. There's no leverage as well, like YieldMax. So now we're gonna, in this part of the video, I'll try to compare each one. The management for the MER, I believe, is exactly the same. It's 99.99, right? Yeah, here it is. It's 99 right now, so it's about the same as the YieldMax one. This one's gonna have monthly distributions. They only came out with one of them. You have the distributions calendar. They only came out with one, which was $7 a share, which was absolutely ginormous, which is why you see 162% yield. That's just based on the last distribution. I'm very, very certain, pretty sure that the next one's going to be much, much lower than that. So I believe this one came out. Yeah, it had a really good, MSTR had a really good May or April, I believe. So that's why the distributions were a lot higher in that month, even for MSTY, right? If you look at the one in May, it was $2.37, whereas the one before and after is not as much. So don't think you're going to get a massive, crazy $7 per share distribution with IMST every time. I don't think that will happen. In terms of strategy, there's not much. You'll just have the regular language for a classic covered call strategy, right? Aims to generate monthly income for investors while providing capped upside exposure to MSTR. That's what covered calls do, like I discussed at the beginning. You're getting limited or capped upside exposure to MSTR. So it's MSTR, but you're giving up some of that upside. So if we look at the fact sheet, there's basically it's an active cover call strategy, just like YieldMax. To me, it looks very, very similar to what YieldMax does. There's no leverage. The management fees, the MER seems the same. It looks very, very similar. So I don't see much difference personally between MSTY and IMST. Okay, if we do, for example, a total, we'll do some total return comparisons, but because they haven't been out for long, there's not much. But if you just do MSTY versus IMST, we have about 2 months of data or something like that, because IMST came out in April, the early April. And you see that it's almost identical, but MSTY right now has the advantage. If you look at the total return, you see it's very similar. It does have the advantage in terms of the total return, but it's kind of early, you know, maybe 6 months, a year at least of data we'll see. But to me, like we'll see, we'll also look at percentage movements at the end of the day for about 5-6 days. So I want you guys to not only understand each one, but also have an idea of how they move every day. We'll look at that as well. But to me, MSTY, IMST, very, 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 very similar. Okay, in terms of strategy. MSII is completely different. This one has a twist on it. This is growth and income ETF, and it has leverage. Number one, it has leverage. That's a huge, huge thing. You guys know that personally, I love a little bit of leverage with the covered calls. That's my preferred way of investing. I invest in, which is very popular in Canada. There hasn't been any at all in the US until now. Rex seems to be the first one to deploy or launch about 25% leverage and covered calls together. And another thing to note is that MSTY and IMST are pretty much covering, I believe, the whole portfolio, whereas MSII is not covering the whole portfolio. They're covering only half of the portfolio, which means, translation, they're doing covered calls on only half of the portfolio. That's why you see here half uncapped upside. Right? They're only doing the cover call strategy on half the portfolio, hence growth and income. Another very important thing, if we look at the fact sheet, it has 25% leverage reset daily. So this is a nice amount. This is a small amount that they use in Canada, which I find is really, really good for a long-term investor. So I'm very excited about this because it's the first like 25% leverage cover call ETF in the US. They're also not covering the entire portfolio. So this is really similar to what they do in the Canadian landscape. So again, this is different because one, it has approximately 25% leverage. It says here that the leverage may actually range from 1.05x to 1.5x. The average is 1.25. Another thing is that this is leverage using swaps, I believe. So in Canada, they just borrow the money. It's what I call classic leverage. This is leverage where it resets daily using swaps. So it's a little bit different. I would say it's a little bit, not more dangerous, I would say, but it's just a little bit different. So we really need more time to see how it behaves, I would say. But to me, this is very, very attractive if you're really a little bit more bullish on MSTR going forward. You want that high yield. Another thing that's different, it's giving weekly income. Weekly income instead of IMST and MSTY providing monthly income. That could, some people really like that. They haven't declared their first distribution. I think they're due to declare it now, today actually, on June 16th. So we don't have an idea for the yield, but guys, the yields are going to be very high on these because MSTR is very volatile. It's as simple as that. But it looks like the gross expense ratio is 99 basis points, which is good, same as the other one. So again, the difference is the same management fee. There's 25% leverage approximately on this one, and they're only doing covered calls on half the portfolio. So you're going to get a little bit more price upside capture than IMST and MSTY. Okay, I highly recommend, by the way, to read the fact sheet of all of these as well. Last but not least, on the American side is MST. This is also weekly distributions. The yields, I just checked, based on the last distributions, about 70% plus yield. So very high yield. But this one, the leverage is through the roof. It's between 150, 1.5x, or here, 150 to 200. So it's a lot higher than MSII. I would say this is a little bit of leverage, right? The 1.25x. This is 1.5 to 1.5 to 2x. So it's a lot more leverage, and I highly recommend, if you're interested in this one, to watch my video with Sylvia Jablonski where we discuss this ETF's strategy in detail. And I ask her flat out, is this for long-term investors or day trading? Because typically when you're having 1.5 to 2x leverage reset daily, they're typically more designed for day trading. She said kind of both. So it's this one, I'm hesitant to, if you're American, I would probably be hesitant to go all in on this one as a micro strategy investment. Maybe you could combine it with the MSTE or MSII, but I think, to be honest with you, this is more designed for day traders. Okay, so these are the four now that we have access to in the US market: MSTY, IMST, MSII, and MST. If we do some total return comparisons, even though we don't have much data, I think MSTY and IMST are very close, similar strategy. Right now, MSTY is outperforming it. If we do MSTY, for example, which we'll keep as the benchmark, I guess, versus MSII, I think we'll just get like 1 week of data. Right now, MSII is underperforming it seems, as well. So remember that MSII is leverage, and this actually shows exactly what happens when you have a little bit of leverage. On a down day, you're going to go down a little bit more. You see MSII is blue. On an up day, you're going to go up a little bit more. So you see right here at this point, MSII is underperforming MSTY. Here it's outperforming. Here we go. We're going down. MSII is going to go down more. So remember that you do have a little bit of 25% leverage means you're going to go up more when you're up, when MSTR goes up, and you're going to go down more when MSTR goes down. So about 25% more, by the way. So there's not enough data here to really see, but either way, I wanted to give it to you anyway. And then if you do MSTY versus MST, for example, MST is, underperforming. Of course, on an up day, like we'll see in a second, it's gonna greatly outperform. But again, this is the type of data that tells me that maybe MST is not designed for a buy and hold long-term investment like the other ones. But hey, that's just my personal opinion. Now, and by the way, before we go to looking at the daily price movements of all of these, in Canada you have MSTY. So if you're Canadian, by the way, my personal opinion here, again, not financial advice, I would stick with the Canadian ones because You don't have to deal with the currency conversion. Don't forget there's 15% withholding taxes, and if you would hold any of the US ones in the TFSA and cash account, you guys already know how I feel about that. Yes, you don't have any in the US, in the RRSP, for the Canadian RRSP. And if you're wondering, well, what about Trump's bill proposal where it's going to increase the withholding taxes from 15% to 50%, 15 to 50, that's only on dividends. MSTR has no dividends. This is all covered call premium, so that does not apply to this. Okay, so you have MSTY, which is the same stock symbol as the YieldMax one, but in Canada, and then you have MSTE. MST is basically the same thing as MSTI, same management fee, same everything, except it has 25% leverage and MSTI does not. You guys know that the one I hold, the one I like, the one I prefer is MSTE, because you guys know that my preferred is covered calls and 25% leverage. This is classic leverage. It's not like the using the swaps reset daily. They borrow the money. It's based on the current interest rate plus whatever fees they pay. I like MSTE better than MSTI. I don't see why, if you're going to hold something long term, I don't see why you will hold MSTY versus MSTE if you're Canadian. That's just my personal opinion, guys. If MSTR does well over time, of course, most likely, pretty much MSTE will outperform. Plus, you're going to get higher yield, of course, with this one, right? So in Canada, in terms of cover call strategy, you guys know that Harvest typically covers about 33% of the portfolio, and the options are slightly out of the money. So not a lot of cover calls here, which means you're getting more upside capture. MST, same strategy, except there's 25% leverage. So they typically write at about 33%, but they're allowed to go up to 50%. They're not allowed going over 50%. So MSTE would pretty much be very similar to an MSII, right? 25% leverage. But I think MSII does a little bit more cover calls because they actually go to 50%. These guys, they can go to 50%, but they're typically at 33. Okay, so that is pretty much a difference between all of them. Now what I want to do is look at the prices of these ETFs and try to figure out how they behave versus MSTR stock, which is obviously the benchmark for these, right? So here's a strong update. And another thing I'm going to tell you is that it's not always going to be perfectly correlated, number one. And number two, for the Canadian one, which you'll see the TO, the MSTE, which is a leverage one, the MSTY.TO, the non-leverage one, there's also currency impacts. So if there's a day, the MSTY.TO from Harvest and MSTE from MSTE.TO from Harvest, they're not hedged to the Canadian dollar, which means that if there's a day that the Canadian dollar gets weaker and the American dollar gets stronger on that day, that's going to benefit MST and MSTY. They're going to go up even a little bit more, but the opposite is also true as well. If the Canadian dollar does gains in a day versus the US dollar, that could negatively impact. So there are little currency implications with MSTE and MSTY. But for the American ones, you're really looking at what MSTR does. So let's go through it, guys. This is a strong update. MSTR went up 4.71%, and you see MSTE is up a little bit more at 5.5, and you see MSII, and I put them in this order on purpose. I don't have the Bitwise one in this one because I added it later in the next one, but this makes sense to me. I personally believe that MSII more or less is gonna be very similar percentage-wise every day to what MSTR does, and you could clearly see that here. Because if you're adding covered calls and it's a big up day, you're typically not gonna go up as much. Hence exactly what MSTY did. MSTR is up 4.71, and the YieldMax one, MSTY, and even the Canadian one, they're not up as much. And I have a feeling this day, you see MSTY is up 4.66, which is just under MSTR. I have a feeling that the Canadian dollar got weaker, and that's why MST and MSTY look exceptionally well this day. So again, a little bit of currencies there. But here's the big story, right? During an up day, MSTR, MSTY and even IMST, the Bitwise one, you're never gonna go as high as much. You're never gonna go high as much because you're capping your upside. And this is typically what it does. If MSTR is up 4 or 5%, MSTY is typically gonna be up about 3.5%, something like that. Of course, MST, the Defiance one, is highly leveraged. So you see it went up 8%, right? This is a very, very good day for MST when MSTR goes up really, really hard. Here's a day where it's more a little up day. So kind of like a flat day, but a little up day. You see June 13th here. So again, you see MST and MSII pretty similar, you know. MSII did a little bit 1.17, which is good. It actually beat MSTR. That's thanks to the leverage, right? So again, MSII, MSTE, cover calls, 25% leverage. They'll typically do similar, if not maybe a little bit better than MSTR. MSTY up not as much, of course, because there's upside cap. IMST actually outperformed MSTR a little bit today. Again, it's not always going to be correlated and perfect, guys, but obviously IMST did really well today. And MSTY slightly under MSTR, which makes sense because remember, Harvest does not do probably the least amount of covered calls. And then you have MST, which is up a lot more, 1.96. So it's kind of like double. It does double what MSTR does so far. Here's a little bit of a down day. So again, MSTR, you'll see MSII very, very closely match. MST down even a little bit more. And during a flatter down day, it's normal for the fund that writes the most covered calls to do the best. Because when there is no upside, the more covered calls you do, the better it is because the premium is kind of free because there's no upside, right? Of course, it's not done daily. It's done, most of these do weekly covered calls, but you see that MSTR is down 24 basis points, but MSTY is up 19 basis points. So it's done really well. IMST also outperformed MSTR that day. So this is no leverage. No, with my opinion, I think a lot of covered calls. MSII, pretty much very, very similar, very, very close. And MSTE, the Harvest one, of course, it's going to do a little bit better as well because it's a down day and there's some covered calls. And MST, you're looking at almost down double MSTR. Here's another one, guys. Let's do the exercise again. You have MSTR down 1.78. MSII is down a little bit less, which is good. MST is very similar. And again, on a down day, again, MSTY and IMST are going to win because they're doing more covered calls and there's no leverage. So they're down a lot less. They're down a lot less. Same thing for MSTY, the Harvest one. It's down less than 1.74. But of course, MSTE, it's down a lot more because it has a lot of leverage. Here's a little bit more of a down day, 1.9. You see, again, similar circumstance. And this is a day I could guarantee you just by looking at MSTE and MSTY that the Canadian dollar did well versus the US dollar that day because MSTR is down 1.9 and MSTE is down 1.99, even more. That makes no sense. That basically means that the Canadian dollar did well that day, and that impacted MST and MSTY negatively. That's why you see MST down 2.64. Right, down a lot more than MSII, for example. And once again, MSII, very, very correlated, very similar to MSTR. MSTE and IMST, of course, are going to do better. And this shows me that MSTY is down less than IMST. They're both down less than MSTR, but they're both, MSTY is down even less. This leads me to believe that maybe MSTY does a little bit more covered calls than IMST. But again, just my opinion, we need more and more days, more and more data to see what happens with that. So guys, that's pretty much it. Now the $1 million question, which one do you get? Which one do you invest in, right? Remember, they're all tied to MicroStrategy, and MicroStrategy is tied to Bitcoin. Always got to remember that. It really depends on your objectives, everyone. Okay, in my personal opinion, if yield and income and the highest amount of income is your priority, you don't want the leverage, I would, MSTY looks like is probably the good one for you. And IMST, I see this almost like a mirror image of MSTY. The management fee is the same. They're obviously doing a lot of covered calls. There's no leverage. Maybe MSTY is doing a little bit more covered calls. So you'll have to wait and see. Always, pop those two in this dividend channel tool where you can literally just compare the total return between the two. But so far, MSTI IMST, to me, potato, I would probably stick with MSTY, to be honest, just because it has that track record. It has a lot of AUM, but you'll have to wait and see. So if yield is your priority, it would be that. Now, if you're like me, obviously you probably know what my preference is. If you know my channel, you know what I invest in. I personally like MSII the best one, personally, because you're gonna do more or less what MSTR does with that income. That's just the format that I like. Covered calls, but not on the entire portfolio, maximum 50% of the portfolio, which is exactly what they do here. So you have, that's why it's called growth and income, right? So 50% of this portfolio is MSTR. The other 50%, that's where they're doing the covered calls. On top of that, it's leverage 25%. The only thing that scares me is that it's not regular leverage. It's not classic leverage. So I don't know if it resets daily, it's going to make a difference. But so far from the price changes, you're looking at having a nice weekly yield and similar movements, similar performance to MSTR itself. That's what I like. I want to have income, but I want similar performance to the underlying asset. And the only way to do that seems to be adding a little bit of leverage. MST, I think the leverage is a bit too much. I think it's mostly best designed for day traders. But maybe if you're really bullish on MSTR, maybe you could combine it with MSII or MSTY if you just want a little bit more oomph. Also, another thing is that it pays weekly as well. So this could be a good combination with MSII. But if I was American, everyone, MSII would probably be my choice, or my second choice would probably be MSTY just because of the track record, or maybe a combination of the two. Again, my personal opinion here. Okay. Now, of course, if you're Canadian, you guys know I'm going to say I would rather go with MSTE, because I don't understand why anyone would have MSTY without the leverage when you could just have MSTE. Same exact strategy, same exact thing. Covered calls on about 33% of the portfolio, max 50%, 25% leverage, very low management fee of 40 basis points. I personally would go with MSTE. Now, if you want to generate USD, and if it comes to your RSP, you absolutely want the un-American one. Again, my opinion would be the same thing. MSII, I think, could make a lot of sense for an RSP or a lira, but I think that MSII is very similar to MSTE in terms of strategy. You're going to get similar results. I think maybe MSTE does a little bit less covered calls than MSII. But either way, what I like, Arvest has the edge with the management fee. The management fee is less. It's less than half of MSII. Of course, the MER is going to be high because that includes leverage costs. Yeah, I mean, MSII, MST, very similar. So I'm out of breath, but the goal of the video is really to try to educate you. And of course, these are all my personal opinions. I'm not a financial advisor or anything like that. Just a disclaimer. Between the different strategy now, covered call income ETFs, you got a lot of choices. Again, remember what you're investing in. Your fate is really going to be tied to MSTR, and your income is going to be tied to the volatility, the implied volatility of MSTR as well. So give me a thumbs up. Hit that like button. I would really appreciate it. I put in a lot of effort in this. I'm out of breath. I would really appreciate it, guys. Do you have any other questions? Is there one maybe I didn't cover? Maybe there's other. I'm pretty sure there's going to be other strategy cover call ETFs in the future. But again, remember, they're all very similar. You just got to figure out and select the one that best suits your investment objectives. But if you're thinking of retiring off of this type of ETF, it's something you need to be really careful about. It's basically saying, I'm going to retire off of strategy. Can you retire off the strategy? Well, these ETFs are tied to strategy, and the income could vary very greatly. So it's not a very good, consistent thing to retire off of. Obviously, it provides a lot of income to a portfolio, but I don't think it's designed to retire off of. So give me a thumbs up again, guys. I would really appreciate it. Make sure to check the links, all the links in the video description below for the affiliate links and everything, and see you next time.